Who wants to pay no taxes in retirement? Seems like a fallacy, seems like it's unattainable, seems like you're not able to have any assets or income if you're going to pay no tax. Well, what if I told you it's possible, and it all depends on how you prepare? I've got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. If you plan ahead appropriately, you can build wealth and yet shelter it from taxes. It almost seems counterintuitive. And if the Roth IRA wasn't so popular and so prevalent, you might say there's no way that that's possible. Back 20 years ago when I started my career and I would teach people, educate people about the Roth IRA, it was just getting started at that time. So many people said, there's no way, that's not a thing. And I even had a few people who said, I'm actually not even gonna fund it because I know they're gonna roll that back. I know they're not gonna let that happen. And sure enough, fast forward 20 years, and not only is it still around and still a thing, there's been an expansion of it. There are more ways for you to build wealth and have it sheltered from tax, not just while it's growing, but never pay tax on it again. And while that means not only will those assets be usable by you in retirement tax-free, but it also, those dollars will not count against you towards the calculation of whether your Social Security is taxable, nor will it impact the ability for you to pay the least amount for Medicare, Part B and Part D. It's not gonna cause income-related adjustment amounts. Now, I'm not taking anything away from pre-tax 401ks or IRAs, getting that deduction up front. There are many, many times when that is beneficial and that makes sense for you. It's not a one-size-fits-all that you should always fund accounts that are growing tax-free for you. But however, when you only have all of your investment dollars, all of your retirement assets in those pre-tax accounts, they have unfinished business. You look at it, and I remember early in my career as well, helping an individual who was very excited that they'd achieved that $1 million saved up in their 401k, and huge milestone, absolutely. But I told them, it's really not all yours. Some of that is Uncle Sam's, and we've got to figure out strategies to get as much of that money out of that account into your pocket and usable to you with having as little amount go to Uncle Sam as we can. So it's hard to imagine, but yes, there are several options for you to build wealth tax-free and not pay taxes in retirement. What are my top 3 ways that you can do that? Let's get into it. Well, the first is, of course, the Roth IRA, Roth 401k, and doing Roth conversions. Anything Roth, and I get a lot of teasing here at the office because I'm such a big proponent of it. But that's where you would start, right? The Roth IRA, the Roth 401k, and doing Roth conversions. When you're contributing to a Roth, okay, there's 2 ways to get money into a Roth, whether IRA or 401k. You can contribute. And you need earned income in order to do that. If you have too much earned income, you can't fund a Roth IRA directly. You need to do a backdoor. But there is no income limit on funding the Roth 401k. When you make that contribution, does not help you on your taxes today. All of the activity within the account, so capital gains, dividends, interest, that's all tax sheltered. But then when you pull the dollars out after reaching age 59 and a half and after meeting the 5-year rules, okay, multiple plural, then the earnings, the growth comes out tax-free. There's also no required minimum distribution on the Roth, so you can let that money grow tax-free as long as you'd like. So yes, planning during your working career. If you heard me state at the beginning of this video, yeah, do you want to pay no taxes in retirement? And you said, oh my goodness, yes. Or you heard the story about, I saved $1 million, but it's not really all mine. I wish it was all mine. In a Roth, it is all yours. So look throughout your career, when does it make sense for you to be funding a Roth and take maximum advantage of it? And those times when it really does make sense to fund a Roth, either your income's temporarily low or markets have been depressed, maybe doing Roth conversions. And this is where you transition dollars from pre-tax that you'd already saved up pre-tax, or maybe the company match that you'd receive, that was pre-tax, and you shift that over to the Roth side. That's a Roth conversion. It's a taxable event, but it gets those dollars on the tax-free side of the ledger and growing tax-free for the rest of your life. So the Roth is the obvious one. The second one that is becoming more and more popular as a retirement savings tool is the health savings account. Yes, this is another way for you to have assets grow tax-free for your retirement. Again, it's not just the Roth. Now there's also the HSA. With the HSA, your contributions go in pre-tax. It's a deduction, so it does help you today. All the activity, interest, capital gains, and all of that, that's all sheltered from tax. And then if you withdraw the dollars for qualified medical expenses or to reimburse yourself for previously paid qualified medical expenses earlier in your career, then that money can be pulled out tax-free. And so a lot of people are shoeboxing their HSA. I talk about this a lot because, again, a lot of people want to get to retirement and be free from taxes, or have a lot of opportunities to pull dollars out of accounts and not pay taxes. And the HSA is a fantastic way to do that. So shoeboxing your HSA is contributing as much as you possibly can into that health savings account. And then as you have, little medical expenses, prescriptions pop up, whatever, instead of using your HSA to pay for them out of pocket. And I know that impacts the budget, but it's worth it. And I'll tell you why. Because you pay for those out of pocket, but then you hold on to the receipt. And as you hold on to that receipt, your HSA, because those dollars are still in there, you've invested them or they're growing for you. And then when you show up at retirement, your HSA is that much bigger because of all that compound growth, but you've got a stack of receipts where you can then reimburse yourself, take a withdrawal from that larger HSA and reimburse yourself tax-free from all those medical expenses that you paid out during your career. Imagine the possibilities of maxing out that Roth IRA every year, maxing out your HSA every year, and having that accumulation by the time you reach your mid-60s and ready to retire, that much of your wealth sheltered from tax and tax-free for the rest of your life. It'd be unbelievable and truly able to attain that, we're not paying taxes in retirement. But it's not just the Roth and the HSA. A very, very underutilized retirement tool is the 529 plan. That's right, the 529 college savings plan or educational savings plan. This works, it functions just like the Roth IRA, except it can be used for qualified educational expenses. So your contributions are after tax. You might get a state tax benefit here in Indiana, the best state tax benefit out there, $1,500 maximum state tax credit. That's unbelievable. But at the federal side, no tax benefit. All of the growth and capital gains and dividends and interest is all sheltered from tax. And then if you withdraw the dollars, paying for qualified educational expenses, things like tuition, room and board, books, even a computer, then that comes out tax-free. Why am I bringing this up with retirement? Because many of you have a goal in life of maybe not spending all of your assets. And if you're not going to spend all of your assets, who are they going to go to? If they go to your kids or maybe your grandkids and you want to assign a purpose to those dollars, it could be towards their education. The 529 used to just be for college. Now it can be used for primary school and private school and those sorts of things. And so consider having, while you're building wealth, if you know where you stand with your retirement plan and you feel confident and have an objective that, I would hope I'm able to leave an inheritance to the kids. I hope we're able to bless the kids or grandkids with education. Funding some of your building some wealth into 529 plans, again, shelters it from tax so that those dollars can then be used by your kids, grandkids, and be withdrawn tax-free for their educational expenses. This has always been a multi-generational tax planning strategy that we've used with our clients, but it's gotten even sweeter over the past couple of years with the emergence of the new transfer from 529 plan to the Roth IRA. Just came on the scenes. Up to $35,000 for an individual over their lifetime can be transferred from their 529 plan to the Roth IRA. So think about this. You've got grandkids and you're funding their 529 plan, but you're not sure if your kids are also saving up for their college as well. Maybe you guys should talk about that. I don't know. But say those grandkids then get through college and there are dollars left over. There's resources left over in the 529 plan. Number one, very fortunate for you. But number two, you now have the ability to transfer up to the contribution limit every year of the Roth IRA. Transfer money from that 529 plan for that grandchild into their Roth IRA, allowing those dollars. Imagine in their late teens or their early 20s, funding their Roth IRA with up to $35,000 spread out over a few years, dollars that would then be able to avoid tax for the rest of their life, right? If they're in their 20s, those dollars could avoid tax for the next 40, 50, 60 years. Talk about not paying taxes in retirement. That's a way to do that multi-generationally. With proper planning and a proactive approach, you can save up, build wealth into accounts where you avoid paying taxes in retirement. Sounds too good to be true. It's not. All it takes is the appropriate proactive tax planning, working with your certified financial planner. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.